Have you ever wondered if another global financial crash hits tomorrow, what will actually survive? Will it be digital money like Bitcoin or the ancient safe haven gold? History, technology, and psychology all give us different answers. Let's break it down, step by step. Every 10 to 15 years, the world faces a major economic crisis. 1929, the Great Depression. 2008, the housing market crash. 2020, the pandemic shock. And many experts warn, the next big crash is not a question of if, but when. During crashes, people panic. Stocks fall, banks fail, and ordinary savings get wiped out. That's when investors rush toward what they believe is safe. But here's the big debate. Is safe still physical gold? Or is it now digital money like Bitcoin and stablecoins? Gold has been money for over 5,000 years. The Romans stored it, kings fought wars over it, and central banks today still keep thousands of tons of gold in vaults as backup reserves. Why? Because gold cannot be printed, it can't be hacked, and no government can just create it out of thin air. In 2008, when banks were collapsing, gold prices soared by more than 30%. It acted like a life jacket in stormy seas. But there's a problem. Gold is heavy. It's hard to transport. And in today's digital, globalized economy, moving gold across borders isn't practical for the average person. Enter Bitcoin and digital money. Bitcoin was literally created in 2009 as a response to the 2008 crash. It was designed to be decentralized, borderless, and independent of governments and banks. With just a smartphone, you can send Bitcoin across the world in minutes. No bank manager, no approval, no gold bars in your suitcase. And in some cases, digital money has already saved people. In Venezuela and Argentina, where hyperinflation destroyed savings, people used Bitcoin to protect their wealth. In Ukraine, during war, crypto was used to move money instantly when banks were frozen. But digital money is still young, it's volatile, and governments are now trying to regulate or even ban it. So, what happens in the next crash? If banks collapse, people may lose faith in paper currency, rushing toward gold. If governments restrict movement of money, people may turn to digital assets to escape. If inflation skyrockets, both gold and Bitcoin might rise, but in very different ways. One thing is clear. Gold has history on its side, but digital money has speed, accessibility, and future demand. Maybe it's not gold versus digital money. Maybe it's gold plus digital. We're already seeing experiments. Digital gold tokens backed by real gold. Central bank digital currencies CBDCs that mix physical reserves with digital payments. Investors diversifying, holding both assets. So instead of asking which will survive, maybe the smarter question is, how do we prepare using both? History tells us every empire, every system, every currency eventually fails. But value doesn't disappear, it shifts. So when the next crash comes, will you put your trust in the ancient power of gold or the digital future of money? The choice is yours. If you enjoyed this breakdown, hit that like button, drop a comment with your thoughts, gold or Bitcoin, and don't forget to subscribe for more History Meets Finance insights.